Good afternoon. My name is Celine, and I would like to welcome you to my PechaKucha presentation. Let's start with a quick question. What if contracts could sign, verify, and enforce themselves without the need for a third party? Sounds futuristic, right? Well, the future is already here with smart contracts. What is a smart contract? Well, imagine a contract that doesn't need an attorney, a witness, or even a wet signature. That's what a smart contract is: self executing contracts with terms written into code. Why smart contracts matter? Because they eliminate the middleman, reduce costs, provides transparency, and security. So think of it like this: a smart contract would not let an insurance company deny a claim. You can't cheat, it's locked. You cannot change the terms like you can do now. It's so easy for insurance companies to go online and change terms. No more with smart contracts. How smart contracts work? Smart contracts operate on blockchain technology, making them tamper proof and secure. It works like this: agreement created, conditions met, then it's automatically executed. A real world example of this is real estate transactions. So it would work like this: you buy a house, it will automatically transfer property ownership when payment is made. Instantly, it will release the funds from escrow. You wouldn't need a middleman like brokers, loan officers, realtors. Even title companies would go away at some point. So essentially, smart contracts would streamline loan payments and escrow services without the need for banks. Smart contracts aren't perfect. They have vulnerabilities like coding errors, and as the number of transactions increases, network congestion can occur, leading to higher transaction fees and lower processing times. So, what is the future of notary services? Some theories are we are a third party and will be eliminated. I think the future is about collaboration, not replacement. Notaries will remain vital for bridging the digital and physical worlds. Smart contracts could reduce some tasks, but they can't replace human oversight for identity verification or complex situations. By embracing technology, notaries can expand into roles like a compliance advisor for smart contracts, or think about gig platforms like signing companies who offer low fees. They will be eliminated because you can work directly with the client, negotiating better rates. How notaries stay relevant: be an expert in new technology, offer value beyond the stamp, invest in blockchain certification training, learn smart contract verification processes, develop new service offerings around smart contracts, and stay updated on smart contract legislation. So there will be industry disruptions by smart contracts. For instance, auto loans, there will not be a whole bunch of legalese, no confusing talk. It'll be written in plain language like a fourth or fifth grade level. You will be able to track progress of terms and no hidden surprises. Smart contracts can reduce the risk of fraud because paper contracts can be altered, forged, or lost. Multiple versions of the same contract might exist, making it difficult to determine which version is correct, creating opportunities for fraud on documents like wills, trust, and power of attorney. People will get married on the blockchain. Are you a wedding officiant? How can you stand out with offering this new technology? Couples will utilize smart contracts to define terms of their relationship, like asset sharing or personal commitments. Like we all know, relationships sometimes come to an end. Well, you guessed it. Divorces will be done on the blockchain. Smart contracts will eliminate the need for family court. Remember, if conditions are not met, it auto executes like child support or alimony payments. There will be ethical considerations. Since smart contracts are self executing, what happens when something goes wrong? If a contract is poorly written or unfair, who is responsible? Will notaries play a new role of reviewing agreements for fairness before they are executed? The DAO hack of 2016. This was a major smart contract failure. So the DAO stands for the Decentralized Autonomous Organization. This was a venture capital fund built on the Ethereum blockchain. It allowed investors to pool cryptos together and vote on which projects to fund. In June 2016, a hacker found a flaw in DAO's smart contract code. The vulnerability allowed them to repeatedly withdraw funds before the system could update the balance. The hacker stole 50 million worth of Ethereum from the DAO. This hack proves that notaries are still needed to ensure proper oversight. The role of government and regulation in smart contracts. How are governments responding to smart contracts? Well, some countries and states recognize smart contracts as legally binding, while others lack clear legislation. In 2017, Arizona passed laws recognizing smart contracts and blockchain signatures as legally binding. Nevada has provided clear legal framework for the enforcement of smart contracts. In 2018, Tennessee passed legislation recognizing the legal validity of smart contracts. Wyoming has passed legislation authorizing the rise of smart contracts, and Vermont went a step further in May 2018, allowing LLCs to be on the blockchain. There are pending bills in Nebraska, New York, and Ohio. Do you think smart contracts will replace or empower notaries? I want to empower you to learn about blockchain technology. Change is happening whether we like it or not. Our choice is whether we evolve with it. Notaries have safeguarded trust for centuries in the digital world. That role doesn't disappear, it just evolves. I want to thank you so much. Thank you for watching my PechaKucha presentation. I appreciate it.